Hi, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. So, yeah, Mike, I've been paying attention to the European market a lot lately, just to see what's been going on over there. And yeah, it is kind of interesting how the market is acting exactly like a bear market is supposed to act, although we're not totally into a bear market.
Yeah.
And so very interesting.
Yeah, and I think that's the big difference. If you look at Germany or China or really whatever, we are pretty clear in a bear market kind of since start of the year, first quarter, second quarter, depends a little bit.
Right.
And now there nothing has changed to the better, but the US is following.
Yep. Yeah, without a doubt. So, okay, we're going to get going. If you could mute yourself, we'll push the go button, and we will be taking off here shortly. So, again, this is Dennis Wilburn. I want to welcome everybody to this week's session of Making Money Trading Stocks, Options, and ETFs. It's been a very interesting week. We'll kind of go over that briefly, covering just to say about the last couple of weeks, it has not been a great time to be a long-term buyer. We're waiting for a capitulation in the market to be taking place. Hasn't happened yet. I want to welcome everybody here. Let me take care of a couple of housekeeping items. If you do have a comment, please use the chat board to basically respond to me or ask your questions, and we'll continue on with that. Yeah, don't use the question and answer period, because I do not have an administrator, and therefore I'm not paying attention to that page. So again, use the chat, and I will see that coming forward because I've got that set up on one of my separate screens. My intention today is to basically get 10 to 15 minutes, and then we'll be moving on, and then basically let everybody get back to their life, if that's okay with you. So away we go. This is Making Money Trading Stocks, Options, and ETFs. As you heard earlier, Michael Bishop has joined us. That means the summer holiday period is over, and Michael is back doing business as usual in the stock market. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. My son Brandon has joined the Active Trend Trading team. We're really glad he has. Brandon used to work with me back from 2005, 2009, doing a lot of technical analysis and basically the back testing and all kind of stuff. He has been very responsible and very active in pulling together our new service called Market Action Points, and so we're glad that Brandon is on board. It's kind of nice to work with family. So our objective today, we're just going to do a really timely, actionable intel review, and we do that at the end of every week. Anybody who's joined us on Facebook, welcome. Again, you can make your comments there on Facebook, and I will see those later on. And I do two streaming videos on Facebook each week. One is on either Sunday night or Monday, where I talk about basically the art and science of active trend trading, highlight what I see coming up for the week, and then also this one on Friday, which is the Making Money Trading Stocks, Options, and ETFs. Market review, the sell-off into support and beyond in some of the entities. are we setting up for a Santa Claus rally, or there's a lot of angst out there regarding several different things. One, the yield curve, a couple of other, inverting, a couple of other things having to do with the trade war with China, between the United States and China. Next week, what could be driving the market is the Feds meet. It would not surprise me to have the Feds walk away from next week's meeting and not do anything. And that may be exactly what's needed to stimulate the Santa Claus rally, which right now, Santa Claus has not showed up, and all he's going to leave for us is a lump of coal in our stockings, unless he shows up. It may just be, the Santa Claus rally might be DOA. What are some of the other things? Global economic slowdown. It seems like right now everything is basically hair-triggered to the sell side. Any type of bad news or what is perceived to be bad news, it's immediately sell, sell, sell. Wish I had one of those sell, sell, sell sound effects like Kramer has, but I don't. So we'll take a couple look at some stocks, ETFs performance. I also want to throw out there LABU, LABD. Guys, if you're looking for just one entity to trade, this thing has some really powerful other issue that you have to be behind the timing on this. Some really nice moves up and down. So here's where we're set as of this point in the year. I'm about 35% active trend trading system, in particular on strategy 3 and strategies 2. Strategy 1, a little bit weak for the year, but cumulative, doing fine. NASDAQ, correction, the Dow, the S&P, down for the year, down from the high from last year. NASDAQ, up for the year. NASDAQ Composite, up slightly for the year, down from last year's high. That's an important thing to be noted. And then the Russell down more than the other entities. It is definitely leading the way down, if that is the direction in which the market is going to go. Let's take a look at a couple of well, we utilize the ETF, the SPY, Spider ETF. One of the things to take a look at weekly here over on the left, and the daily on the right. Let me do this. There we go. I'll use my little red pointer so you'll be able to see a little bit better. I threw in a Fibonacci that went from this swing low here, which was back in about April, up to the swing high that we happened up here in the mid part of September, and then the sell-off. As you'll note, there is a 23%, 123.6% extension of the fib down here at the 252 level, and a 1618 Fibonacci retracement. So often, if we break and close below the 100, that increases the probability that we're going to fall not just to the 1236 extension, but the 1618 extension. What's very interesting about that is if you take, let me get this, there we go. If you take just a line, extend it from the high here down to the low here, or to the fib, and we grab that, let's activate it, and grab it and bring it down. It probably isn't the one I wanted. It is not, no. Sorry about that. Let's get rid of that one. I wanted to take a look at this range here, this little box range here, from 280 to 260, 20 points. Extend down from there, it brings you right down to 240. And so that's the point I wanted to make on that. Also note that even if the S&P sells off down to the 240 level, would be 2,400, it's not quite a bear market. That is only an 18%, move to the downside, and so it would not be categorized as a bear market. Let's go on down here to 2, there we go. See, about 18% would be how far that would be down. Now on the other indexes, a slightly different story, but I just wanted to throw that up with some fibs this weekend to say, okay, hey, we closed below the 260, which we're flirting with it. This hammer that showed up a week ago, or actually on Monday this week, is still in effect. It is still a valid hammer saying that this is where the reversal should take place. Price action is really battling over whether or not that is the case. That's going to be something it wants. Cues. The NASDAQ, a little bit, the NASDAQ has actually held up a little bit better than the S&P and or the Russell. However, we did gap down. Look at a really strong downtrend. We're working within this downtrending channel, and that would tell us that we could expect that we could potentially move all the way down to 155 and or even lower, let's say 150-ish, before we get a bounce within that channel. So that's what we'd be looking at happening. And so this may be just a continued sell-off. One of the things, when we are in a significant downtrend, oftentimes we will get a fake out on the TSI. TSI starts to click up from about the midpoint, and all it is saying, haha, nope, don't be fooled. In a case like this, sometimes you have to take those trades, but you want to keep your stops exceptionally tight for if you get a reversal and we pop one down. And that's exactly what's happened here of late. As you see, we came right up to the 34-day moving average, and we reversed lower. We came up right to the combination 200, 100, reverse lower, reacted up, and now we're in the process of another thrust down in this downtrending market. So I'm not in a hurry to really do anything. Michael, are you seeing anything in the indexes that has you excited?
Not really. So I very agree with your analysis.
Okay. What are some of the other? Are you watching the China, the FXI, or anything like that for what it's doing?
Yes, but now the American is more interesting because we chatted before a little bit about this. I mean, if you take, I don't know, FXI for an instance, for a proxy, or yeah, just that's a good one, I think. Then you see things don't look that much different, but that the whole trend reversal started beginning of the year and not in October.
Right, right.
And just for a comparison, if you take EWG, that's Germany. And
just for everybody's, the Chinese market has been in a bear market since almost the beginning of the year. And what was the German one?
EWG, yeah. And it's also a big, I mean, these two markets are maybe the biggest one in capitalization.
Yeah. So look at that. It's down almost 30% to the low for the year. Again, isn't it interesting how German market, Chinese market, some of the biggest ones in the world.
Or and last, maybe you take Japan, then we have all the.
And what is that? What's the ticker you follow for Japan?
AWJ, I think. Oh, EWJ, sorry.
EWJ, there we go. And wow, almost every one of the foreign entities has a similar trajectory and has been, well, now Japan is not quite down to its low. It's about down almost 20%. We'll give it 18.9%. But it's very interesting how each one of the foreign markets have FXI. Hold on, I'm making a note to myself. And
I think that's a very interesting one. And the other is you can take whatever asset you like. It's a similar picture. I mean, also gold or oil or nothing helped. Yeah.
Yep. No, I mean, because I've been trading a little bit of oil futures, and just loving what, it's stuck in a range also with the oil futures. And coming in next year, and just to let everybody know that I will be doing a little bit more on futures for the premium active trend trading members who are interested in doing that. I will not be spending a lot of time there, but I'm looking at some swing trades. The leverage and also following the rules is very important, but really good for either developing weekly or monthly cash flow for members. And so I will be including that for premium members only going into next year. So very interesting, Michael. I'm going to throw up IWM.
The last one that, so that
go ahead.
The full picture is the bonds, TLT. I don't know how long you can look back, but there it seems that, I don't know, multi-decade uptrend is stacking or even reversing.
Yeah, here is, I can look back all the way, I can look back a long way, back to, I don't want a daily, hold on a second. Wait a second, I thought I had a, here's the one I was looking for. Okay, I've got a monthly on the left and a weekly on the right. And so, yeah, I don't do bonds that much, but so what are these, what's this bond picture telling you?
It's a little bit strange. I have seen another one. I said, this is not that, well, no, that's not so impressive.
Okay, TBT?
No, not TLT should be fine, but maybe I was looking to something different.
Okay.
I quickly look at my desk.
I found out something this weekend, that the traders and investors in Europe are much more likely to do bonds than U.S. investors. I found that was somewhat
I don't know. I mean, I think Germany is really they do a lot with their bond. They are called this.
So, okay, I'm going to cover just two more other entities. Let me get them up. I don't want the 2-hour chart. I want the daily, weekly, and that is LABU. LABU is one of the Magnificent Seven ETF, leverage ETFs that we follow, and it has huge moves. Great, I believe it's great for either day trading or weekly swing trading. And I just want to highlight it to folks. It is coming down here into what appears to be a bottom down here around the $40 level. We nibbled a little bit yesterday. But these moves are pretty interesting. A 2-week move, and from the last low up to this high here was about a 47% move. And so I'm not saying we're trying to capture all of that, but we're paying attention to these regularly now so that they can be part of a capital building portfolio for individual premium members. And so LAB is one of the ones we look at. The other one is, and they also offer the inverse of, this would be LABD. And again, something very similar. Here's a weekly chart, a daily chart over here on this side, weekly chart on the right. And as you can see, it came out here, hit some support, but I'm looking here at this bounce up off of the 200-day moving average. Again, it went up about 33% in about a five-day period. So yes, it's very volatile. However, for this kind of market, waiting for it to hit its lows or its highs and then reversing out of it, and just grabbing a hold for a 10, 15, and sometimes 20% run over a short period of time, excellent concept for the shorter term swing trades. And we are really focusing on the leveraged ETFs the Magnificent Seven leverage ETFs to do that. The other one, keep an eye on. Market is selling off, crapping out, if you will. Well, guess what isn't? Our buddy Tesla. Tesla on a daily basis is showing a bearish Rami, so it may be kind of rolling back. But Tesla, since the market started crapping out back in October, Tesla is actually up from 260 up to the path. I mean, it actually made it all the way up to 380. So about a 50% gain. And Tesla has enough daily movement and weekly movement that if you are an option trader, it makes it is an exceptional entity to be traded. I'm watching it right now because it is back up against its long-time resistance at 380, looking for, okay, do we trade this to the downside? So that's the entities that I wanted to share with you quickly this weekend. And then here's the LABU also to kind of bring that home to you. LABU, this is a weekly chart over from 2017 through about September 2018. We had 5 runs in 2 years, 76%. Premium members receive the alerts on these going forward. And if you would like to be a part of that, we do have a special that we're running. Prices are not going to be this low again, and what it is 40% off the regular premium membership of $74.99. You can go here to activetrendtrading.com/premium membership special. The password to get in and secure your membership is bonus. And once in at this rate, prices will never go up. I do not raise any prices on folks going forward, once they are in the family. So taking a look at NASDAQ 100. Again, we're in that season, part of the year where we should get a Santa Claus rally right now. I mean, we may be seeing this, first half of December pullback and then an acceleration, but we're not getting the dadgum reversal candles that we'd like to see yet. Gold, oil. Oil also, mid part of December, tends to get a bid. And this can be a very explosive move to the upside. One thing of all the seasonality charts that I've been watching all year long, oil seems to have followed its seasonality chart the best. And so gold had a lot of issues going against it. But again, we're in that time of year. Is gold going to pull back and then rebound for the last, part of December on into January, which it normally does? We shall see. Right now, we don't know. Outside meetings, there's a monthly Bay Area Moneymaker meeting. This is a webinar meeting. January 5th, we're going to be talking about setting up for 2019, preparing for record profits. Streaming videos Friday and Monday. We've chatted about that. If you want to get a hold of me, you can reach me. They're announced on Facebook. There's our Facebook presence. Premium members every Wednesday at 6:30 Pacific time. We get into technical training about how the active trend trading system works. And so that's what I've got for today. Michael, I want to thank you for joining us. Eric, I tell you what. Was that a hanging man on LABD? Let me take a real quick look at it. Excuse me. LABD. Yes, well, kind of. I would have to say on a daily basis, kind of. It's not really reversing that strong of a uptrend because the uptrend has only gone on for like 2 days. And so while technically it is a hanging man, because of the shortness of the uptrend, I give it less credence. So. Okay. Hey, Michael, thanks for joining us. I hope you have a wonderful Christmas and holiday season over there.
Yeah, well, thanks a lot. Thank you for having me.
Yeah, and anytime, man, just let me know,
Looking forward.
and
Yeah.
it's always a pleasure, and you bring great value to
Thank you so
our
much.
webinar. And so, with that, guys, I'm going to say aloha. God bless everybody. Have a wonderful weekend. Aloha, mahalo.